Hey traders, who wants to paint some candles with me? I'm ready to get into the SPAC game, bro. One thing I'll tell you, what color is here? Green, baby. We're going green in the SPAC land. Let's go ahead and start the SPAC's attack. How's my little trees doing? Let me bring in the best tree I have grown. My man, Chrisopedia.
What's going on, Bob? We've been gone the last 2 days, so it's always exciting, right, to come back because there's so much to talk about, so much news. We've got an interesting company today for our interview that I really want to hear more about. It's Friday, which, as you guys know, if you've watched the show, Fridays are more casual day, right? So we'll hopefully get to some ticker time later on in the show. So sit back and, relax. It's SPAC's attack time.
All right. Now, I have been having some mic issues today, so I will ask the chat. Do you guys hear me okay? Or I did see someone mention I might have to come back. I've had to restart my computer multiple times today. I don't know what's going on. So if you guys hear me with the deep voice, let me know because I will have to restart and leave Chris here. But let's go ahead. Let's get started. Let's pull the Bob Ross off. All right. I want to keep the afro going here. I like the fro, but the beard has got to go. All right. I'll keep the fro on, though. How's that?
Looking good. Looking good.
What can I say, guys? Let's get this party started. Let's go ahead. Let's get into some headlines. A lot of SPACs moving out there. I have some of my own that I've been watching. And hey, if you don't believe the SPACs are back, well, I mean, you probably haven't been watching these moves lately. So let's go ahead. Let's get into those headlines. Chris, please inform us because all this hair is getting to my head and I just don't know what's going on out there. So that's why I come to my man to let us know. Take us back to those headlines.
All right, guys. Yeah, a lot to get to on headlines today. Up first, we have MOTN. So this is Motion Acquisition Corp. So the company is merging with .go. They reported that they secured new contracts today. No terms were disclosed, but again, this company continues to expand. Earlier this week, they reported third quarter revenue of $81 million, which was up 200% year over year. They also said that they're rolling out a series of major initiatives and joint partnerships, and they see revenue hitting $260 million for fiscal 2021. So if you didn't know, .go is like it used to be called Ambulance with a Z. It is a, on-demand medical service company. They operate in 26 U.S. markets and the United Kingdom. They have license applications pending in an additional 14 states. So 26 plus 14 would bring them up to 40 states, covering, the majority of the U.S. states. So MOTN, definitely one to watch here. And then turning to more earnings, we have Betterware de Mexico, BWMX. Company reported third quarter earnings today. So revenue is up 4% year over year. They did say that they had several headwinds in the quarter, but that they're progressing, forward. And they actually have some exciting things. I don't want to talk too much about this company today because actually Betterware de Mexico will be joining Power Hour today, coming up after this show for an interview. If you remember, they were on our show a couple months ago. They will be talking all about that third quarter earnings report. And then also about, some new company initiatives moving forward. Remember that this is one of the better performing SPACs of the last year. Prior to today's dip, they also pay out a dividend. So BWMX, definitely one to watch. Then we have Wallbox, WBX. So Wallbox, which was one of the high flyers earlier this week, they announced that they will provide a business update on Thursday, November 4th. I'm going to talk a little bit about the calendar later, some SPACs to watch next week, but keep that on your radar. Wallbox, an update next week, electric vehicle charging company that has been hot all week. And then speaking of electric vehicle stocks that have been hot, we have Lucid, LCID, which we'll, of course, take a look at when we cover our watch list. This is the #1 trending stock on StockTwits today. It has started getting mentioned heavily on Wall Street Bets. So the company will have their first deliveries tomorrow of the Lucid Air, October 30th. There was also news that Saudi Arabia is considering a manufacturing facility. Shouldn't come as a big surprise since that country's investment fund is a big investor in Lucid. And then also they announced that they will report third quarter earnings on Monday, November 15th. So less than 2 weeks after that first delivery, we will get earnings from Lucid. So I expect to hear lots of updates on how reservations and deliveries are going. So definitely something to watch. Yesterday, we had the presentation from Facebook Connect, talking about augmented reality, virtual reality. And of course, if you did not hear yet, the company changed its name to Meta, right? New ticker will be MVRS. Meta is the new company. So yesterday, we saw lots of AR and VR names get a jump on the news from Facebook. And one of those companies that got a little bit of a lift yesterday, but is starting to take off today, is Matterport. So Matterport was on our show a couple months ago. We actually got some exclusive headlines for our Benzinga Pro users. Again, if you're not using Benzinga Pro, you are missing out. pro.benzinga.com for a free trial. Those headlines we had out this morning. The company said, I like to think that by digitizing the built world, Matterport is creating the metaverse. So there you have the metaverse connection. They also said that their models are optimized for Facebook's Oculus Quest using virtual reality mode in the Matterport platform. And then they also highlighted that they announced a collaboration with Facebook earlier this year. So the company saying our collaboration with Facebook is with their AI research organization. So again, Matterport MTTR could be a play here on AR, VR, and the Facebook name change. I'm seeing shares up 10% today now. So definitely keep this one on watch. The other related SPAC to Facebook's news yesterday was MPAC. Shares hit over $11 in a short lift. Warrants were up triple digits. Shares were actually halted. So MPAC is bringing multi-metaverse public. This is a small company, and I will note that there is not a lot known about multi-metaverse. No presentation came out with this SPAC deal, but this was the only metaverse name that popped up in a search of SPACs. So keep that in mind. We have MP Materials, MP. I talked about this earlier this week, right? Company was targeted with a short report. And MP's response, they said that they report third quarter earnings after close on November 4th and look forward to updating all of their shareholders on the state of their business and industry. So again, I'll hit on next week's events later on, but MP definitely on watch. They have that earnings next week. They're going to have their rebuttal to the short report. And I also want to note that with that short report, I actually saw on Twitter, several Twitter users shared the short report with the hashtag ad, as in Grizzly Research actually paid to promote that short report on Twitter with some FinTwit users. So that's an interesting tactic. So something to keep in mind with MP. And then turning to votes, MCMJ, which is merging with Leafly, they voted this morning to approve the extension. So MCMJ shares were also trading higher today on that news. We're up about 4%. This one's gotten a lot of attention this week, going from 10 to close to or over 11, I believe. So keep this one in mind. We talked about this one at the cannabis conference, right? This is a cannabis play, a thing behind the thing for the cannabis industry. Then MCAD approved their merger with Better Therapeutics, will trade as BTTX today. TMTS approved their merger with NextNav, new ticker NN today. This would be the high redemption, low float one to watch, as 17.4 million shares were redeemed, 87% of the shares. So keep an eye on NN, new ticker today. Then TDAC was approved, their merger with Lottery.com, the new ticker LTRY next week. This is one I've called out a lot, right? It's a low floater already, and also have to note 20.9 thousand shares were redeemed despite shares trading over $14. So someone missed out on some big profits in this by not understanding the redemption process of a SPAC. Then we got a couple of votes set, FORE on November 8th with P3 Health Partners, DDMX on November 18th with Codair, and THMA on November 23rd with Pear Therapeutics. And then turning to our one deal, this one was announced last night after market close. TWNT, satellite company Terran Orbital, is going public, valued at $1.58 billion. PIPE includes an investment from Lockheed Martin. That's always a key here on these space and satellite plays. So Terran is a leader in small satellites. They're a key supplier for the military, intelligence community, and civil and commercial customers. They said that they're the largest independently owned manufacturer of small satellites in the U.S. They plan to launch one of the most advanced Earth observation constellation of small satellites. They announced a $300 million, 600,000 square foot manufacturing facility on the Space Coast of Florida. That announcement came last month. It will make them the largest vertically integrated satellite manufacturing facility in the world, capable of producing over 1,000 satellites and space vehicles annually. So they plan to enter the SaaS business model, and not software as a service, but satellites as a service. So TWNT is the ticker. Shares up 1% right now to 10.01. That was the SPAC deal announced this morning. That's what I've got for headlines. I know that was a lot to get to there, again, with the last 2 days off from the show. What do you think, Mitch?
All right, I should be back and not
sounding good.
At least it seems like everything's back. I did the restart. We're good. We're ready to go. I'm super excited. I've been seeing a lot of these SPACs moving. It's not only Lucid. A lot of these have been moving, and there's a lot there going towards that $11 and $12. And when you think about it, from underneath 10, that's a pretty good return, right? I mean, 20-30% on just about any investment is not going to be a bad investment. What are you seeing out there, Spencer?
I'm just joining just to say that, Mitch, you sound a little bit weird, but I'm here for it.
I still sound weird?
Yeah,
he sounded good on my end, but
really?
Yeah.
All right.
Still sounds like Darth Vader.
Okay, so maybe it's, I don't know.
I don't know what's going on with Mitch's mic today. I just wanted to come in and tell you that, Mitch. Like, you sound like I'm here for it. It doesn't sound bad, but
I guess a $300 setup doesn't want to work.
Maybe it's just a little bit deeper than normal, but
I'm okay with it. I'm here for it. I say we just roll with it.
I like it.
I mean, it seems like everything doesn't want to work for me right now because I just got signed out of Google. I'm just getting hacked or something. All right, so
good show, though, Chris. Yeah, it was a lot of headlines. You jammed it in there because you got to get to your guest, obviously. So nice job, man.
Thank you.
All right.
Hey, well, looks like I'm gonna leave Chris here. Chris, if you want, you can kind of hold it down for a second here. I got to restart again, trying to fix this audio. I don't know what's going on with my M audio here. Sounding like a little Darth Vader, but hey. I guess that's the Halloween thing there, but it goes with the hair, they say out there.
Yeah, it must be the Bob Ross hair today. But yeah, Mitch, I mean, I let's get started on the interview, and then we can have you, join back up. So if you want,
that seems smart there. At least I think my audio for my computer will sound good. So let's first do this. I wanted to put on a video for us here, so let's do that. I'm going to share system audio here. Let's check out a little bit about Aurora first so we can learn a little bit more about it. Then we'll take a deeper look, and Chris will nail down this interview for us.
Speaking from my own experience, Aurora has the best team of engineers I've had the pleasure to work with. Many of us have prior experience in self-driving and have shipped some of the most advanced automotive systems on the road today. We've also architected high-performance consumer electronics and developed cutting-edge robotic systems. All of that experience really shows with how we work and how we develop our technology. We've collectively created a holistic and integrated approach to building the Aurora driver, and that approach has allowed us to build faster and smarter. This ability to build faster and smarter is what will propel us toward meeting our goal of having autonomous trucks on the road by the end of 2023, with autonomous passenger vehicles following closely behind by the end of 2024. At Aurora, our hardware is purpose-built to meet the complexities of self-driving. High-precision, self-driving software requires carefully crafted hardware to power, synchronize, and ingest the data from dozens of high-bandwidth sensors. This requires a deep understanding of the software architecture and its dependencies, and a close collaboration between experienced hardware designers and software engineers. We've built a deeply integrated hardware team that produces high-performing, custom-built products that are designed and tested in-house.
Aurora's hardware includes a custom computer and sensor suite that's common across all of our vehicle platforms. This includes trucks, light-duty vans, and passenger cars. With our hardware and software teams working closely together, we recently released an upgrade to our computer, which is powerful and elegant and has 5 times more processing power and additional redundancy for added safety. Using our first principles approach with our deep industry experience, the team leverages best-in-industry components that satisfy the Aurora driver needs so that we can focus on those developments that add value to the Aurora driver. A great example of this is within our computer, with our proprietary time-sensitive network switch, or TSN for short. The TSN is the backbone of our computer and stitches together all the sensors and peripheral devices into one common hub. The TSN uses an advanced networking chip and a unique combination of high-bandwidth automotive physical layers that efficiently move data between our sensors, computer, and vehicle. TSN provides duplicate data packets, redundant pathways, and synchronizes our sensors down to the microsecond. Aurora's hardware team is uniquely skilled at product development, and our business model allows us to build focus.
All right, guys. Yeah, you just saw in that video a very exciting company. We've got Aurora. So joining us on SPAC Attack today, we have Chris Urmson, the CEO and co-founder of Aurora, that company going public via SPAC merger with Reinvent Technology Partner Y, ticker RTPY. Chris, welcome to SPAC Attack. How are you doing today?
Doing great. How about you?
Doing great. It's always nice to meet a fellow Chris out there. So this will be a fun interview, right? Chris interviewing Chris. But
works for me. Yeah.
Awesome. Well, we've got so much to talk about. This is a very exciting company. I think a lot of our viewers are familiar with this company out here. But before we dive into Aurora, just wondering if you can give viewers a little bit of history about yourself and your experience in the self-driving space. I believe that you once worked for Google, so we'd love to hear more about your history.
Yeah, sure. Thanks for asking. So I've been working in this space since about 2003. Back then I was at Carnegie Mellon. I was part of the team, or as the technical director for the team that compete in the DARPA Urban and Grand Challenges. These were these robot races the Defense Department put together. So the first 2 years we had a giant Humvees racing across the desert. The third year we had a Chevy Tahoe driving around an airbase. And so we ended up winning the Urban Challenge, which was the last of those events. Then in 2009, Google asked me to come out and kick off what was then a super secret project with the self-driving car program. I helped build that with an amazing group of people from the 6 of us who started it and when I left, we had 600 something people, and it's now Waymo and off doing whatever Waymo's out there doing. Then in 2016, I ended up leaving, spent some time figuring out what to do next, and realized there was an opportunity to build something special in this space. And that's what we've been doing with Aurora for the last almost 5 years now.
Awesome. Yeah. So turning to Aurora, one of the first questions we always like to ask here on SPAC Attack, since we ask all things, SPACs, de-SPACed, is why the decision to bring Aurora public via SPAC? And was a traditional IPO also considered by your company?
Yeah, for us, it was a 51 kind of 49 decision to go SPAC versus IPO. And for us, we wanted to make sure that the when we entered the public markets, we did that with something that looked like a high quality IPO. And so our first conversations were with the long-term growth investors, so that would come into the pipe. And we use that as a process to figure out what's the right market price, right? And so we engaged with the T. Rowe and Bailey and MSIM and the capitals, and came to a price that we felt was fair for the market. And then we went and looked at the numerous inbound SPACs we had that talked to us, and looked at the list of what was available, and cut that down to a handful that we went and met with. And then we ended up going with RTPY, and we did that because we believed that we could align the long-term incentives. That that there's some of these SPACs that are out there where it feels like it's kind of a flip it and get rich quick kind of model. And what we wanted was a company where they understood this was a long-term build. This was something that was going to create, if we execute well, it's going to create an immense amount of shareholder value. And so let's set up for that. And so that's what we found with the model of kind of venture capital at scale that the reInvent team has.
Perfect. Yeah. I mean, you hit on two key points there that I wanted to dive into. So up first, some of the investors, right? That's something we always talk about here on the show. You mentioned, Bailey Gifford. We've got T. Rowe Price, Fidelity, and then reInvent, of course, with Mark Pincus and Reid Hoffman. Yeah. And then we also have investments from Amazon, Uber, Volvo, and others. Can you just talk a little bit about, what this means in terms of validation for your company to have these big names involved with the long-term story?
Well, that was it, right? We wanted to help. Like we're building a company to be here for the next century, right? And so we wanted to make sure we had the right capital partners along the journey with us. So as I think about who are really good, high quality, long-term tech growth investors, and Bailey Gifford, if you look at their track record, it's awesome, right? MSIM is awesome. T. Rowe, Fidelity, right? These are folks who want, they do the deep work. They're able to commit the capital and hold it there for extended periods of time. And so those are the kind of anchor tenants we want. But then you're probably aware at the beginning of this year, we acquired Uber's self-driving car business. And so that's now part of Aurora. And Uber could have partnered, could have continued to invest in it, could have sold that business to anyone. And the fact that this is a team that had, a tremendous technical understanding of the problem space as a real long-term business need for this technology, and they bet on us, right? That was an incredibly fantastic validation for us. And then similarly, if you look at our automotive partners, Toyota, Volvo Trucks, and PACCAR, which is the Peterbilt, DAF, and Kenworth brands of trucks, right? These are incredible companies, right? That again could have partnered with anyone, could have invested in anyone, and they've chose to invest with us. Think about PACCAR. This is a company that's been profitable for 82 years, right? The management team there is incredibly capable, incredibly thoughtful, and they're making a bet that Aurora is the company they want to work with in the AV space. So we're proud of that for sure.
Awesome. Yeah. And then the other big point, in the investment side of things was a key point from the presentation talking about a 4-year lockup for some of the investors. You mentioned, the long-term plan. That's not something we see too often in SPAC deals, right? We usually see a 6-month lockup or maybe a 12-month lockup. Talk to us about the 4-year, right? Why is that so important for the long-term success of a company like Aurora?
Yeah, well, we think of it as about aligning incentives. And so the way that this deal was structured was for our partners at reInvent, there's a lockup and a vesting. And so for them, the vesting is basically price-based. So if the stock performs well, then they vest into their promote. And so they get a quarter of it on the deal closing. And this is in the S4, so please, go refer to that document. But then another quarter of it at when we achieve $15 a share, another quarter at $17.50, and then another quarter at $20, right? And so that means that if the stock performs, they're going to get paid, which they should, right? If they're doing, if they're creating value in the world, and if it doesn't, then they won't. And then the investment is further locked up. So even if we shoot to $20 and stay there, tomorrow, then they're locked up for 4 years, where it rolls off at 25% per year. And again, this is trying to signal to the market, like, look, this is not a short-term flip it bet. This is we're going to grow and create value here. We did the similar thing for our, the majority of our significant investors, including existing investors in Aurora, including myself or other founders and many of the big folks in here, where we're locked up for the next 4 years as well. And we're going to, that'll roll off basically 25% per year. And again, we want to make sure that, there's a number of really high quality SPACs, and then there's a number that, maybe are less high quality. And we wanted to help signal like, look, we're in this to go win and to play for the long term.
Definitely love that approach here. So let's dive into the business, right? So Aurora, we've got, self-driving, autonomous driving. That's terms that we hear a lot about. So we have a $9.4 trillion global trucking market. So tell us about Aurora and how you will be addressing the trucking market moving forward.
Yeah. So for us, freight is going to be the first market we enter. And we look at the U.S. market, where that's about a $700 billion market today. The big challenges to that market, one is a massive driver shortage. And we're all hearing about the logistics challenges we're facing in the U.S. There's a variety of elements that contribute to that. But a big one is we just don't have enough drivers. We're 60,000 short today, and we're going to be 160,000 short by the end of the decade. What we can do with the Aurora Driver is we can deliver a safe driving capability that works shoulder to shoulder with the people that are driving trucks, can do so in a way where it's not limited by the hours of service that a human driver is. So can operate this, this expensive asset much more. And you can get places quicker, because instead of being limited to driving 10 hours, you can drive 20 hours. And so you can cover twice as much ground. And then on top of that, because you don't have to kind of trade off between the cost of human time versus fuel, we can actually operate the trucks at 65 miles an hour relative, versus 75. And that change from 65 to 75 results in about a 25% savings in the amount of fuel you use. And that's great for the environment, of course, and it's good for the bottom line. So that creates a lot of value for our partners. Our model is to deliver the Aurora Driver as a service. So think of it like a software as a service type business. So we don't want to own trucks. We don't want to go and compete with our customers. We want to actually go and focus on the thing we can do best, which is delivering the driver and enabling our partners to grow and scale their businesses.
Yeah, perfect. That was one of the things I mentioned in the headlines, right? We hear about software as a service a lot, right? The SaaS business model. Aurora will be using a driver as a service model. Can you just expand a little bit on that? What does that mean, in terms of the financial outlook for Aurora using this business model?
Yeah. So as we think about the model, if you're a customer that is buying trucks, what you'll do is you'll go to go to Peterbilt and you say, I'd like to buy a 579 with the Aurora Driver on it. You'll buy the truck from Peterbilt, and then you'll pay Aurora an ongoing revenue stream. And out of that, we'll effectively cover some of the insurance. We'll cover the offboard data services, the depreciation of the hardware, obviously the ongoing development of the driver. They'll get a driver-enabled truck that goes out and builds their business. As we think about this model, as we kind of get into the outer years, rough justice, we think that a truck will drive something like 270,000 miles a year, and we'll generate something like 50 cents a mile of revenue in that range. And so that means we're going to generate something like $135,000 per truck is our estimate today. And there's a lot of trucks out there. And because we're not owning that asset, we're leaning into our partners who know how to operate those business effectively. This turns into a really nice high margin revenue stream business for us, we expect.
Perfect. And then, you mentioned fleet being up first, or freight being up first. But going forward, there's also talks of, the ride hail market, right? You have the Uber partnership and the investment. What does it look like going forward? Additional markets for Aurora in terms of self-driving beyond freight?
For sure. So we start with freight, and then we anticipate entering the ride-hailing market from there. And we're going to be doing that a little bit differently. So instead of trying to build a replacement to Uber or a replacement to Lyft, we're going to layer our vehicles in or feather our vehicles into the Uber network. And this has a couple of really powerful properties. So first, we'll be able to deliver a product that's very similar to the truck driving product, one that'll start just off the freeway. Imagine an airport, drives onto the freeway, takes you down the freeway, drops you off at your hotel or drops you off at the business district you're traveling to, and then returns you. And it turns out that, that looks a lot like, a truck leaving a terminal, getting onto the freeway, getting off the freeway, dropping off at a terminal. We'll be able to do that because we don't have to serve all of the trips in a market. If you're trying to replace Uber and you want someone to actually use your app, you need to service all of the trips. Otherwise, people are like, "Oh, this is confusing. It's too complicated. I need to, I have to think about which trip I want on which app." The other really interesting thing about this is most of the competitors in this space are really focused on the low-speed driving capability. And it turns out if you look across Uber markets, a significant chunk of the trips actually require high-speed driving. And so we'll be kind of coming into that market from the high end. And then because of the special relationship we have with Uber, we have access to their data about how people move in a city on a city block by city block kind of time of day, hour by hour kind of model. And this is really interesting because what it means is as we've got our first product in the market, we can have a near perfect crystal ball that says, if I add this capability, I'm going to unlock this many points of the available market. And so we can calculate and understand what the ROI will be on each feature in a way that, companies would kind of kill for. And so that'll allow us to build out that side of the business really efficiently. And as we add those features to the car, because it's the same software and hardware that's in the car that's in the truck, as the car gets better, that'll transfer back to the truck, and then the truck will be able to go more places and kind of get to more granular destinations. It's going not just from terminal to terminal, but perhaps depot to local store over time.
Awesome. You hit a little bit on the timeline there for freight. I know there's a slide in the presentation that shows a map of the U.S., right? And it kind of talks about, which areas will get added first. Can you just share with us a little bit, the timeline for Aurora here? What key events should investors be looking forward to hearing more from Aurora on?
Sure. So we're looking we're working to launch our product in freight in late 23. That'll be in Texas is our expectation. Why Texas? Because one, it's the largest network or the largest kind of state for freight in the U.S. Second is the weather is good. And third, that the regulatory regime there is quite favorable. And frankly, in 45 of the 50 United States, if we had a truck we had confidence in the safety of, we could bring it to market today. But particularly in Texas, they've been very pro automated vehicle technology. So we're excited for that. We'll then expect that to expand across the Southern Freight network, the Southern Freight routes, and then ultimately build up and into the broader United States.
Perfect. When we talk self-driving, a term that gets thrown out a lot is LiDAR, right? So Aurora has in-house LiDAR technology. Can you talk a little bit about LiDAR and why it's important for Aurora to be doing this in-house rather than using, a competitor out there?
Yeah. So first, we're not really in competition with the LiDAR companies, right? Our business is to bring self-driving technology to market. Do that safely, quickly, and broadly. And so if somebody has a LiDAR that is more capable, that kind of meets our need, we're going to be using that in a heartbeat, right? Like we're not a LiDAR company, we're a self-driving technology company. That said, we just, for the application that we're trying to solve, we think we have a very differentiated strategic advantage here. So our LiDAR, most LiDAR works by sending this super bright pulse of light out into the world, comes back, and you kind of measure when you see something bright enough that you call that a measurement. The challenge with that is, one, you can only get so bright before you start damaging people's eyes. And so there's a limit to how much power you can put out. And then the second is there's a lot of other bright stuff out there. So the sun, halogen headlights, other LiDAR. And so you get some noise from that. For Aurora's LiDAR, first light, What's neat about it is it uses a different measurement mode. It's called frequency modulated continuous wave. And the way you can think about this is we send this wave out into the world, the wave comes back, and then we interfere the outbound and inbound wave. And that allows us then to kind of basically look for the phase difference between the two. And that means that we can estimate the distance from that. What's neat about this is that mixing of the outbound and inbound wave means that we get a 10 to 20 fold amplification. So that means we get more signal with the same amount of power. That means we can see further. And then because we're looking for a very particular wave or frequency or waveform, we can basically discard all the stuff that doesn't do that. So the sun isn't oscillating in this particular way. And so we don't get blinded by that. We don't get blinded by halogen headlights. And then finally, with this measurement technique, we can actually measure the Doppler shift. So this is the way that, if a siren from an ambulance goes by and you kind of hear that change in pitch, you can tell which way it's going. Well, we can see that in the light that we're using to measure the world. And so that means we don't just get where things are, but we get how fast they're moving. And this means that we can react more quickly, more safely, and drive better because of it.
Love that. I mean, definitely safety, a big key here with self-driving. So always love those comments. I want to turn a little bit to partnerships. We've already hit on some of these, but PACCAR, Volvo, and Toyota. So those truck OEM partners collectively represent over 50% of the US market, and that's two of the top 3 truck OEMs. So can you talk a little bit about what these partnerships mean? Is there any, definitive agreements in terms of units or potential revenue down the road?
Yeah, so as we've built Aurora, again, given our focus on building the self-driving technology and working in partnership, it's been let's make sure we go partner with the best. And if you look at the set of partners we have, Toyota, world's #1 car manufacturer; Uber, world's #1 ride-hailing platform; FedEx, largest carrier in the U.S. by tractors and trailers; and then PACCAR and Volvo, which, again, like you said, 2 of the top 3, something like 48% of the U.S. truck market. So amazing partners. With each of them, they're investing tens of millions of dollars. Well, with the OEM partners, they're investing tens of millions of dollars to build vehicles that are compatible with the Aurora driver that we'll then be able to bring to market. So, and with each of them, it's a relationship where we're helping define the requirements for these vehicles. They're building the vehicles and working on the engineering work behind them. What's important to understand is that the Aurora driver is basically platform agnostic, so that it can work on things from light passenger vehicles all the way through big tractor trailers. And it has an interface that we define that allows them to talk to those vehicles. So we can work, and I think we've integrated 8 different types of vehicles. But that doesn't mean we get away without working with the OE, right? The manufacturer, because they understand the vehicle. They have to make changes to the vehicle so that it can be compatible, so that it can operate safely in the world. And so that's really, it's just exciting to see. And like I said, these are companies that are invested tens of millions of dollars to make vehicles that work with us.
Yeah, definitely. I mean, bringing some big names, on the table here. I want to turn a little bit to competition, right? We've heard a lot about autonomous and self-driving, and Aurora, certainly isn't the only company entering or that's been active in that space, right? So what are some of the key competitive advantages? You already hit on some, but just highlight some of the key competitive advantages for Aurora over some of the rivals out there.
Yeah, and there's just awesome companies out there. We're excited. This is an important space, and frankly, it's gigantic, a gigantic space. And just to put it in, kind of scale, in '95, when kind of Google had started advertising was what, $185 billion space, and Google and Facebook are like $3 trillion of market cap between them today, 25 years later. The existing market, which is, and I'm thinking of just ride-hailing, local goods delivery, and freight, is 5 times bigger, right? It's an $800 and something billion market. And so, the opportunity here is profound, and we expect there to be, a number of winners, a small number of winners. What do we see as advantages for Aurora? We see one, the experience our team has. So, I've been doing this quite a while, helped found and build Waymo for many years. Sterling Anderson, our other co-founder, launched Model X and Autopilot for Tesla. Drew Bagnell, our third co-founder, one of the top handful of people in machine learning and robotics on the planet, helped found Uber's self-driving car business. So really deeply experienced co-founders that understand the space. And then we've put around us this attracted this incredible group of people. Nat Buse, who leads safety for us, for 7 years was at Department of Transportation, held their AV portfolio at NHTSA, right? So understands how the regulators think about this. How do we engage with them? How do we help make sure that we're behaving in a responsible way so we can deliver a product? Our CISO was Google CISO. So excited to have Gerhard with us. Dave Madej, who leads business development for us, led corporate development for Mary Barra at General Motors. So really amazing cast of characters. And then we've got about, around 1,600 people at the company today with that deep experience. So that experience means we're focusing on the technologies that will actually scale as opposed to the technologies that kind of end up in demoware. And so that, I think, is an advantage. The partnerships we talked about, objectively, I can't see a better set of partners to have if you're working in this space. And I don't think our competitors can match up there. When I think about the go-to-market path, the way we've architected the system intentionally, the path to enter with trucking and then follow with ride-hailing and not seed either of those markets allows us to tap into kind of the $2 trillion space, which is mobility and transportation in the U.S. and then ultimately much larger space globally. So I think that go-to-market strategy is one that's difficult for some of our competitors to play in, either because of technological limitations or because of business models. So if you're Cruise, doing cool things, but General Motors doesn't make big tractor trailers. And so you're just not going to play there. And so there's just a whole chunk of the market. And so that the fact that we're an independent company means that we can go and kind of steer our destiny in a way that's, that delivers on our mission and will create value for our shareholders.
Perfect. Chris, I want to ask about M&A opportunities, right? So you made the acquisition, with Uber earlier. You talked about, a lot of players in self-driving space, right? So is there room for consolidation within autonomous driving, or is there some vertical, that maybe Aurora would look at down the road for M&A opportunities?
Yeah, so we've been really pretty fortunate with the M&A we've executed so far, and I think there's a lot of intention behind it. So I think we've now made 5 acquisitions. So our first one was a small company called 7D Labs, where we brought in a great person who's been at the heart of what we've been doing in simulation, which is one of the really interesting differentiated technologies we're building here. We acquired Blackmore, which is the heart of analytics, which is the heart of our FMCW LiDAR, our First Light LiDAR, which again, I think is a huge differentiator for us. We, of course, acquired Uber's business in this space, and amazing people, great technology, amazing partnership that came along with that with Uber. We acquired a company called Hours Technologies, which was an integrated photonics company. So these are folks that basically take discrete optical components and put them in a chip, much like you take discrete electronic components and put them in a chip. So that's the path to scalability and reliability for what we're doing with First Light. And then actually just yesterday, we announced the acquisition of Color Space, which is a group of ex-Pixar folks, again, to accelerate that. So yes, we think that's, we don't have a monopoly on awesome people. So finding, great people out there, bringing them in, aligning to our mission is something, we'll continue to do. We do expect consolidation to continue to happen in the space. It's something that, we knew was going to happen when we founded the company, right? Like any industry, you have 1,000 flowers blooming. There's a lot of great people making progress, but most of them don't get there. And so we want to be that place that people want to come and continue the mission. And it's one of the advantages of becoming a public company is we'll have a better currency to go and make those acquisitions and continue to build in the way we expect will be meaningful for us.
Perfect. Well, Chris, before we let you go, got some questions from the chat here. It's something we always like to do on SPACs Attack, right? Our loyal viewers, your potential investors out there. We just got a good one from a longtime viewer, Carl, here, asking, how about other machines like farm equipment? Is there any, interest in farm equipment, maybe construction and mining equipment down the road for self-driving from Aurora?
Certainly an interesting space. In general, they're much smaller markets than the car space and the trucking space, or the light vehicle space and trucking space. It's one of the things. So we have folks that used to work with John Deere on their automation. We have folks that used to work with Caterpillar, and today Caterpillar has haul trucks that drive themselves in mines. And I helped kick that program off with Caterpillar back when I was at Carnegie Mellon, and then a bunch of the folks that are now at Aurora kind of carried that through to productization. So it's an interesting space. It's certainly a place where we could see long-term some applications of what we're doing, but we're going to be focused on getting our core products to market. And then, as we have success and thus have the permission to go and expand into places, we'll definitely go and do that.
We got a comment earlier, and this is one I've heard about self-driving before, right? Comment here from Hearst Scrambler saying self-driving is great until the roads are bad in winter. You mentioned starting in Texas, a fair weather state there. What do you say to some of the naysayers out there, right, who maybe don't see self-driving ever working in states that have, winter storms and other, big weather patterns like that?
Yeah, so I take responsibility for this meme. So I don't know, 10 years ago, maybe 8 years ago, I was, doing an interview and somebody said something about weather. And I said, look, this is a really hard problem. We're going to focus on making it work in good weather first, because there's a lot of the US where it is, and then we'll get to bad weather. And the answer, it's just like any other product. You have a set of features and capabilities you're going to deliver first, because that unlocks value, and then you expand them. As we design the Aurora driver, we're designing the sensor suite to be able to operate through different environmental conditions. This is why we don't just use cameras or just use radars or just use LiDAR. We use the combination of them so that we have complementary data and complementary failure modes. Weather is work, but it's not that big a deal, particularly when you think about the opportunities for safety here. So I talk about, say, driving through fog, right? And a lot of people do what I call faith-based driving. So they look out the windshield, they don't see a car, and so they're comfortable driving 70 miles an hour. And that's how you end up with 100-car pileup on the freeway in Texas. And the way the Aurora driver will handle that is it'll understand I can only see so far, thus I'm going to operate at a lower speed, so that I actually can operate within my safety parameters. And so I think it ultimately ends up with a better, safer driver on the road.
Perfect. I think that's going to do it for questions here. Chris, before I let you go, we have a merger vote coming up soon. Remind everyone the merger vote date and what that new ticker will be for Aurora.
Yeah, so I think our vote is announced on Tuesday. Assuming that goes positively, we would have close of the deal on Wednesday and listing on Thursday. And the new ticker will be AUR. So we're really excited about that, and excited to be out in the public markets and being able to create value for our shareholders. So thank you.
Awesome. Well, joining us on SPACs Attack, guys, Chris Urmson, the CEO and co-founder of Aurora, company going public via SPAC merger, Reinvent Technology Partner Y, current ticker RTPY. But as you heard Chris just say, next week, hopefully AUR, the new ticker. Chris, thanks so much for taking time out of your busy schedule and joining us. We look forward to following the company's progress.
Thanks for having me, Chris. That was fun.
Awesome. Well, thanks again. And guys out there, another exciting interview, right? Autonomous driving, self-driving. It's a topic we talk about a lot, within the vehicle space. And Mitch, this is an exciting company, and talk about some big investors, some big partners that they've brought along the way. You heard Chris say about competition, right? I would agree with him, right? I don't think there's another self-driving company out there that can say that they have these big names for partners out there. So this is a big one. What do you think, Mitch? Oh, we got Bob Ross back in the house here.
Gonna have to paint my way down the street because it looks like Chris is getting after it. One thing that definitely interested me, and I don't know if I'm sounding a little deep still, but one thing that definitely interested me was that the approach of let's not be a manufacturer. We don't need to make the vehicles. We just need to get the technology right. And if there's one thing that you have heard from me, Chris, has been what? autonomous before the real EV
Yes,
adoption.
exactly.
It needs to happen. The consumer needs a vehicle that can push them over the edge, right? Because a lot of us are going to be battling this decision next year. Do I go EV or do I stick with my combustible engine, right? And one thing that can get you over that hurdle is the convenience factor of an autonomous vehicle. Let's just be honest. Once we get that, I sign me up. I'll sit in the back. I'll sit down and just kind of watch. I just took a 13-hour drive to Austin. What would I have done? I would have put it in.
You could have slept. You could have slept, Mitch, on the way to Formula One.
I hit the enter, and I could have been watching the race if I wanted to.
Someday down the road, we'll be able to do that, right? And Aurora is one of those companies that is going to help do this, right? I mean, we all want to get there, I think, right? When we're talking about commutes, I mean, the driver shortage for semis, right? I mean, and safety, right? You heard Chris talk about safety being a key priority. I love that. Also loved Chris's honesty about weather, right? You know, that was a fair comment in the chat, right? Yeah. It's something people always bring up. And when you hear self-driving, you know, you see them start in other states first. And then, you know, the goal is to expand to those states like Michigan here, right? We have snow. But Mitch, I got to say, I've seen human drivers drive in the snow, and some of them aren't very good. So that's something to think about too. So, but hopefully everyone out there enjoyed this interview, guys. Remember to smash the like and subscribe if you already are not a member of Benzinga's YouTube subscribers. Mitch, what do you think? Should we turn to the watch list here and take a look on this fine Friday at what's moving?
Hey, you know, one thing that we can do is always check out our watch list. We'll go ahead and check it out. And what is leading a stock I gave yesterday on at the close and have been talking about it, looking for the reversal. Chris, QS.
Yeah, I put QS on my list, right? Because I wanted you to talk about it because, Mitch, this has been one that you've been all over the past couple of weeks. And this was one that fell out of favor. I mean, remember, this was a $100 stock last year, right? It was one of the hottest SPACs out there. But the technology is a couple of years away. Well, what happened? They reported earnings this week. And by earnings, I mean really their financial report, right? Because there isn't earnings yet. But they said enough to get investors excited again, I think, right? And then you see that turn into the chart where now we see some volume, we see some momentum, and we see people believing in the long-term story.
Hey, well, one thing that I definitely been looking for is what's going to be the next move, right? What can be the next jump up? And one of the things that I was looking for was the underlying assets behind EV, battery, autonomous, charging stations. Those are the ones that I think move first. QS starting to get moving here. I even talked about it on live trading today before the open. I told Carl out there, Carl and I were talking last night about QS. I don't know if he was able to get it this morning. I'm sure he'll be mentioning right now, like, hey, well, looks like I missed out on that one. But that's just how it is, right? And one of the things with these, Chris, you gotta invest. It's not more of a trade, it's an investment. And taking a shot in QS looks like it's not a bad move right now. Has a huge gap up to fill if it gets in this area. Lucid is trying to do the same thing, and we'll see if these can kind of continue moving.
Mitch, the other big winner I'm seeing out there, we got to highlight is Matterport, right? MTTR. I'm seeing now up 15%. Yeah. Looks like we have a headline on Benzinga Pro. Looks like we got a positive, was it an analyst note here? Let me pull up Wedbush. Yep, Wedbush setting a $26 price target. So again, guys, if you don't have Benzinga Pro, you're missing out. We had headlines out. We got exclusive comments from the company themselves. We had Matterport on SPAC's attack a couple months ago. And again, I got to highlight it here, Mitch. Matterport saying, I like to think that by digitizing the built world, Matterport is creating the metaverse. So if you want a metaverse play, Matterport could be one. And again, Matterport has an existing partnership with Facebook, who is now going all in on the metaverse. I think those stories right there, this is definitely one to keep on watch. I mean, it might be a little bit too much of a flyer today, but maybe on a pullback. Matterport looking good, Mitch.
Yeah, one thing that I did see, and I actually we talked about this one, Chris, on live trading, and it was clear as day. This little VWAP bounce right here, nice little VWAP bounce after you got that extension, pull down right to it, bounced off right off of that, and what did it do? It gave you another shot at VWAP, right here, boom, and then it rocketed off from there. So definitely, these stocks, when they seem strong and they get that lift, look for the VWAP indicator to hold to show you that bullish sense. And this one's been doing really good actually on the daily. Look at the daily chart. Nice sideways action. This is what you want to see, that sideways action, right? After a big move up, you don't want to see it come straight back down. You want to see some sideways action before you get that next boost on up, which actually helps it when it gets that next lift because the consolidation builds and we get the next movement. I know I'm still sounding a little bit off today. I don't know what's going on.
I did like the comment about SPAC's attack with Chris and Barry White was one of the comments we got in the chat. Whoever put that in there. Mitch,
the Barry White
a couple more here. TDAC, right, is changing to lottery.com next week, LTRY. I did see shares dip today. This is one that I would be looking at, right, heading into next week. And I do have a long position in these shares. This is low float, so please be careful with this. But I just think once they get that name changed to lottery.com, and then also when they highlight what they're going to do with sports.com, I just think this is one that's going to get a lot of attention. So if this is not on your watch list, this is one I definitely want to draw more attention to here.
Well, you see me drawing here. We've talked about these trend lines before, how long this was holding here in this spot. One of the things that I can point out is with this breakout, you've gotten what? The volume to come back in. So important, Chris. Looking like it's looking good, really. TDAC.
And then VWE, Vintage Wine, is another one I would draw attention to. Yesterday, there was a mention of an OTC wine stock by someone on CNBC. I don't remember the ticker, but those shares shot up, right? Because it was called essentially like the Netflix of the wine industry. I mean, wine is one of those industries where I think once people pay attention to it, there's not a ton of peer plays, and VWE, I think, could get some attention. So this is one to keep on watch as well.
Love it. Love it. Looking like it's setting up, looking like you had what? 1 attempt to break down, 2 attempt to break down, 3 attempt to break down. Then right after it, the next day, what did it do? It wicked, showed you a reversal candle right here. That candle is so important. Now that you have that reversal, I would hold to that low, and you can give yourself a shot for it to come back up towards the resistance. Major resistance is up here towards 1128, 1130s. That's where I could see it filling on up. We'll see if this one can keep moving.
And then Mitch, RKLB Rocket Lab is another one I would draw attention to. So going forward, they have a flight window opening on November 11th. They also have a flight later November 27th. And then they also have earnings on November 15th. They'll be launching some black sky imagery satellites, so keep an eye on BKSY2. But Rocket Lab, 2 launches and earnings in the month of November, Mitch. I mean, we've seen these space stocks before, right? Virgin Galactic and others. Flight windows is a big catalyst, so pay attention to RKLB in November here.
Hey, like you said, back-to-back launches. Why not keep it on watch, right? We'll definitely keep that on watch. Coming up next, guys, we're going to be getting into the Power Hour. What is going to be on Power Hour, Chris?
Yeah, so BWMX, Betterware de Mexico, they reported third quarter earnings today. And this is a company I've talked to before here on SPAC's Attack. They're joining on Power Hour, and they're going to talk about those earnings. And as I said, revenue was up 4% year over year, but they've got an exciting plan ahead how they're going to grow their market share in Mexico from 20% to 40% over the next 5 years. So I will be tuning into that. So BWMX. Mitch, before we go, I just want to say that next week, some of the stocks I'm watching, RTPY, who we, of course, interviewed today, Aurora, they have their merger vote on the 2nd, and also SWBK, their merger with Bird. And then we also get earnings next week, Mitch, from two big names, right? Nikola, NKLA, will be reporting earnings on November 4th. That's always one that moves on Catalyst, right? So good or bad. And then also MP Materials on November 4th. Mitch, I'm very excited for MP to hear their rebuttal, right, to that short report, and then also to hear their earnings, right? I mean, that's one of the big things we've been saying about this company: real revenue, growth. What do you think of MP next week and some of these other companies?
Yeah, I mean, there's a lot to look out for. One that I'm also looking out for that should be having earnings in early November. I believe it's November 7th, but I'll have Chris confirm that, is Body. So there's a lot of them on the list that are coming up. And one of the things that we've been waiting for, Chris, we always talk about it, are expectations being met.
Looks like
That's
November
what these earnings
15,
report.
Mitch. November 15, Body. But that's a good call out, right? That mixed fitness bike, we get to hear how successful it really was. That's a big catalyst there.
I'll definitely be watching it. Full disclosure, I did take some Body, so I have been taking it a little bit. Reason why? I have heard that those sales could be potentially good. So we'll see what happens out of that Body earnings and out of all these earnings, because it's important. Are they meeting expectations is the biggest thing that investors are going to pay attention to.
Definitely.
Because with forward-looking statements, what do we want to find out? Is that it wasn't really so much forward-looking. It was more, yes, this is what we were going to get.
It was real, right? I mean? It was real. All along,
real.
It was real, not a paper dream there. So nice call out, Mitch.
Okay.
Body. So we'll be back on Monday, and we'll try to lay out November, right? Monday is November 1st. So we'll be going over our November calendar and talk about those votes and some of those earnings dates to watch. So an exciting show coming up. But guys, as I said, Power Hour coming up next. Betterware de Mexico, BWMX. You don't want to miss that one. So as always, stay tuned and smash that like, and we will see everyone next week.
All right, guys, as I wrap up here, you guys are probably wondering, why do you look like you look, Mitch? What are you doing?
I mean, don't they say that all the time, Mitch? Why do you...
Well, that's true, right? but we won't get into that, Chris. It's all about the Bob Ross today. And why is it about the Bob Ross? Because it's about you guys out there. We are doing a special giveaway just for you guys out there. So I want to get you guys a part of this giveaway. It's only for Benzinga Pro users. So I will let you know, if you're not a Benzinga Pro user, sorry, you're SOL. If you don't know what that is, ask for your friend to let you know what SOL means. But definitely, guys, go ahead and click that link. Sign up to be a Benzinga Pro user. If you haven't done so before, we'll get you that 2-week free trial that will give you a chance to win $1,000 in cash. Guys, you have a chance to win $1,000 this weekend, only if you're a Benzinga Pro user. So definitely sign on up, guys. Check it out. And Rob Ross Boston. I like it. Can't go wrong. Guys, check out this video, and we'll see you on the Power Hour.
Hey, Zinger Nation. Happy Halloween. We thought we'd celebrate with a $1,000 giveaway. Yes, I said it, $1,000 in cash giveaway. All you got to do is be a Benzinga Pro user to enter. And if you're not, I have a loophole for you. Sign up for a free trial, no credit card needed. Of course, follow Benzinga, hit the retweet, comment below for a bonus entry. You can put your favorite costume or gift idea. Of course, include the pets if you got them. And we'll see you at the Zinger Nation Halloween special.